Hello traders, Day Trader Matt here at businesswithtrading.com, doing a trading strategy recap for Friday the 17th of April. And today was an interesting day. It was the worst day of the week so far in our E-mini trading room. We pulled out half a point, 2 trades. We'll get into that in a minute. Best day of the month in our option service. Today was Premium Friday, or options expiration as everyone else in the world calls it. So we were able to take in all the money that we've been short basically since March. We like to, in our option service, we like to both be long and short of premium. And it really depends on how the market is as to how much premium we're short versus how much that we're long. I use a different model as far as trading options. I don't go with the standard model, let's be delta neutral, or, let's really dissect the Greeks and see where we're at before we enter a trade and look at all these graphs and other shit like that. That's not my style. My style works for me and it does really, really well. I have a lot of members in the option service, and obviously it works for them as well. But anyway, today we were able to close out quite a few positions, take in some premium. Right now in the option service, we're up $4.74 for April. Obviously options, you're looking at 100 contracts, so $474 per contract. If you're trading a larger account, 10, 20, 50 contracts, whatever, you can do the math. But anyway, that's where we're at in the option service. As far as the E-mini trading room, interesting day. We had a successful trade and an unsuccessful trade, and then we had a trade that I gave out. I didn't take it in the room because we ended up just closing out, but it actually worked out, and that would have put you up at least 4.5 points, if not more. What we did, as price opened, it did gap down. We did get long down here. We were able to ride that up, take profit. That was our successful trade. Price started to drop, and we ended up, as it did drop again, it chopped around. We decided, let's get long. And the market said that was a bad idea. It is what it is. So we did get stopped out of that, and price came down again. Came up, and around this area I said, let's get long down here, which actually was right here exactly. And I said, we're looking minimum 6.5 on this trade. Minimum. A little bit higher. But, if you got long down here at 4 even, which is what we talked about, out at 6.5, you're looking at 2.5 points. We traded 2 contract minimum, so you're looking at 5 points. That one trade would have been very nice. That would have added a lot to the P&L. We decided, I think I was talking about it right here actually, on we were talking about it right here actually on this candle. So around 11:20, 11:23, something like that. Price started to come a little higher, and that's when I decided I'm gonna not enter the trade for the trading room. We're just gonna go ahead and close up. I started doing my post-game analysis, and we talked about a couple different things, and then price ended up coming down here and right up to target. This is after we closed the room. But I want to show it just because, it's interesting. I show everything. I show you when I miss trades. I'll show you when we have unsuccessful trades. I'll show you when we have successful trades. So I think in showing that, it shows that not everybody, you don't trade perfect. I don't care how long you've been trading. It's not one of those fields where, first you trade shitty, then you trade a little less shitty, then you start trading good, then you get better, and then all of a sudden you become like a perfect trader where you don't miss any trades and you're always successful. That's bullshit. That's not logical. It's not rational. It's not reality. Thinking that successful traders, professional traders, never miss a trade, that they're 100% correct on everything they do, doesn't make sense. I don't like CNBC, but I'm going to use them as an example. A lot of people that I've seen make fun of a guy named Richard Dennis. No, that's not his name. Dennis Gartman. Dennis Gartman is his name. He writes a letter called the Gartman Letter. I've never read it. I have no idea. But there are some people that look up to him. And some of these people are billion-dollar traders. Now, does that mean Dennis Gartman never misses a trade? He definitely misses trades, and he makes some pretty bad calls sometimes on CNBC. But is he successful? Yes, he's definitely successful. He writes a trading letter that goes out to a ton of different traders. Like I said, I've never read it. I don't really have any desire to. But I feel it's a good example. Because a lot of people make fun of him. I don't really... He makes some interesting comments every now and then. Like, I remember last year, or the year before, something like that. Probably the year before last year, because I haven't watched CNBC in a long time. He was short the euro dollar in gold terms. Stuff like that. And I was actually short the same exact trade, so I thought that was pretty interesting. A lot of times you can use CNBC as a contrarian indicator. A lot of times I do that. That's what Mad Money's for. We used to do that all the time. Like 5 years ago, we would use Jim Cramer as a contrarian indicator. He liked something. Okay, great. Let's find a reason to short it. He didn't like something. Okay, can we get long this one, or is it just a piece of crap and we should just stay away? For the most part, that's how we used his show. I have, like I said, I haven't watched CNBC all year, actually. Last year, didn't really watch it at all either. But it's a good example. And it's an example that you do not have to be right all the time. Now, let's go back to the first name I said, Richard Dennis. He actually started, I think this was 1980. He took a lot of, it was kind of like a Trading Places type of a thing, if you've seen Trading Places with Eddie Murphy. If you haven't seen it, you should watch it, because it's a pretty good movie. But Richard Dennis did something similar in that movie. And he ended up taking a couple of, I think it was like 10 to 15 students that had never traded before. I think that was a requirement. You needed to have never traded before. And he taught them his system. Now, his system was successful maybe 30% of the time, something like that. And 30%, if you look at baseball players, if you hit 300, you get into the Hall of Fame. That's 30%. You hit 30% of your pitches. Well, he hit somewhere along there. About 30% of his trades were successful. And some of his students are multi-millionaires. I believe one of them is Ed Sequoia, if I'm not mistaken. You've probably heard that name. But it's a good example. You're not going to be a perfect trader. You're not going to have a 90% success rate over the lifetime of your trading. You can be pretty good. I usually hit 60 to 80%, but I have weeks where I'm down at 40. I have months where I just get ran over by the market. Luckily we've been positive every single month. But that's not to say that some months I just get ran over. Some days I get ran over. So that's what I wanted to communicate today. Today was a really good day in our option service. We were able to take home a lot of premium. That's what trading's about. And I say that because it's all about risk management. Depending on the market environment, maybe we're long 60%, short 60%, short 40%, or maybe we're long 40, short 60. Maybe it's half and half. Maybe we're long 80, short 20. It always differs. But it's all about being able to mitigate your risk. Where am I at? Where can I be at? Today was Friday, and I saw the trade, I liked it, and then I saw this move up, and I was like, all right, well, let's just pull it off. I don't like this hitting this high. In hindsight, yeah, that was a perfect trade because I said minimum 6.5, and it moved over that about another point, a little bit over a point and a half. But trading's all about risk mitigation. You need to be able to know what you're doing, what you're striving for, and be able to call it quits. It's trading is not about just. It's not a boxing match where it's just punch, 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 punch. If I punch enough times, maybe I'll hit the guy enough to hurt him. Maybe he'll go down and I'll win. Trading is not that way. Trading's more like a chess match. And in chess, if you've ever watched it on TV or played it, it can be a little bit monotonous because it's a strategy. It's a strategy game. Strategy is basically what it is. That's what trading is too. Trading, you're setting up, you're looking for certain setups that will give you an edge. So anyway, hopefully you got something out of what I was talking about today. It's an important topic. So if you something resonated with you, if you feel like you can add something, definitely comments below. Love to hear what you have to say. Have an awesome weekend on that note, and I'll see you back here next week. Thank you.